Hello everybody, this is Toni Turner and welcome to the market now as of about 12:30 p.m. Eastern on Friday, August the 3rd. Well, U.S. stocks are slightly higher today after gains in the consumer staples sector, boosted by Kraft Heinz strong earnings, were offset by data which showed job growth slowed in July, and as China proposed new tariffs on $60 billion worth of U.S. goods. The U.S. consumer staples sector rose 0.8% and led the gains among major S&P sectors. And on that bit of news, let's go on and look at three charts that could give us some insight into the week to come. First of all, as we normally do, we're going to look at a daily chart of the S&P 500 Spider, symbol SPY. On this chart, you can really see the entire year of 2018 and what's happened so far. Of course, as you remember, the SPY made a new all-time closing high on January 26th of $286.58. Of course, we remember the really volatile ride we had down to the 200-day, back up, back down to the 200-day moving average, the black line, and then back up. And on up, we finally started going in the months of April, losing some of the volatility that had been so wild in January and February. Now, as you know, in the since starting the month of April and moving up into present time, the SPY has been rising in an actually very nice uptrend here, as you can see by the uptrend line I've drawn and the channel line above. The SPY has been moving, except for a short little move down here in June. The SPY has been moving and trending in an uptrend above its 50-day moving average, which is really a good thing, and we certainly hope it continues to do that. When I captured this chart today, the SPY was sitting at $282.55. That's about $28.25 on the S&P 500 itself. So again, you can see it's moving in a nice uptrend. Now, of course, there could be potential support coming in here. The red line, the 20-day moving average, is coming in at $280.54. So you see we have a good amount of support here at the 280 level, or 2,800 on the S&P 500 itself. We also have price support nearby at $276.77, right at the 50-day moving average. And it's actually important for most stocks, certainly for indexes, to stay above their 50-day moving average. That's generally accepted as a line that we want price to hold above. So if we can hang on here, if we can stay above the 50-day moving average, certainly above the uptrend line here, which is coming in at about 275, we want to, or 2750 on the S&P 500, we want to hold above that. Now, after I said that, I'm going to say that many times August is a very lazy month in the market, and sometimes we get dips in August. Can't say whether it will happen this year, but many times it does. As I thought back to all of the years I've been looking at charts, I remember many, many times saying the August lows, the August lows, the August lows. So it's a possibility. It's not an absolute, but there's a possibility that as we move out of earnings season that we're going through right now, and as in the coming week as we move out of that, the market could typically soften a little bit. So you might want to watch out for that, but of course it's not a given, it's just a possibility. The next chart we're going to look at today is a chart of the PowerShares QQQ. As you all know, the QQQ represents the NASDAQ 100, very important index in the market, and of course the PowerShares, a lot of its weight it comes from the FANG stocks, from Amazon, Apple, Intel, Microsoft, Facebook, of course, Google, Amazon, all of those stocks. Now, as you can see, the QQQ has been moving in a really nice uptrend here, actually outdoing the SPY, because the QQQ has still kept up making, or has remained making new all-time highs. The QQQ made a new all-time closing high actually week before last, January 25th at $182.82. Right here, this high you see. When I captured this chart today, the Qs were trading at $179.48. This little tiny small range candle you see right here is where we currently are. Now the 20-day moving average is coming in at 178.77, and the 50-day moving average and this uptrend line, as you can see, have become kind of glued together here starting in May. And they're coming in pretty much together right in the 177 to 175 zone here. So with two of these technical indicators together, this should provide pretty good, pretty strong potential support for the Qs. Now, again, we saw that last week Facebook earnings took the Qs lower for sure. Pullbacks in Google, pullbacks in Amazon really dropped the Qs lower. But yesterday, Apple's earnings, boosted the Qs higher. Today, it's in kind of like I don't know what to do land, kind of standing on the curb looking both ways. So we'll see in the coming week if the Qs can remain in this uptrend, remain above the uptrend line and the 50-day moving average. The MACD here has dipped a little lower and is pretty neutral just over the zero line. RSI is pretty much neutral underneath the overbought zone. So let's keep an eye on the Qs in the coming week and see if it continue in this uptrend. Our final chart today is one we haven't looked at for a while. This is a daily chart of the Select Sector Spiders Utilities ETF, the XLU. Now, XLU components take up only 2.88% of the S&P 500 index. So when and if the S&P 500 gets a little soft in August, if that happens, utilities aren't as affected as much by the S&P pulling back as much as, say, growth stocks are. Utilities are also considered to be defensive, so if August does get a case of the summer doldrums, utilities can actually be a good place to hang out. The XLU has 29 components. The top components are NextEra Energy, Duke Energy, Southern Company, Dominion Energy. Now, again, utilities, as you can see by this chart, here's January starting right here. And so you can see by this chart that utilities have been, I'm going to say, mostly quiet for the year. They fell pretty dramatically. The XLU did. It's down around 47.50 in February when the market pulled back pretty dramatically. But then it started kind of moving back up in a very gentle way. Nobody paid any attention. Fell back down in May, rallied back up over the 50-day at the end of May, and then fell pretty dramatically along with a lot of other stocks in June. Then rallied back up as our market got a little more defensive. The XLU started moving a little higher here as people are moving, or investors are moving more into stocks that have a little, shall we say, a little safer place to hide out. So right now, as I capture this chart, the XLU is trading at $53.15, above its 20-day moving average, above its 200-day moving average, which is coming in at $51.65. Certainly above this intermediate term trend line that I've drawn. That's a pretty strong trend line because it's touched so many points along the way. Trend line here is coming in at about $51.50, and we have the 50-day moving average coming in at $51.27. So right along in here, this is a pretty good matrix of support, potential support, which I like to see. So if in the coming week the XLU can move up above, say break above this high back here, like 53.25, if it can break above that, if it looks like it can continue higher in the coming week, I may add shares to my portfolio. My initial stop would be a close below the 50-day moving average, which again is coming in at $51.27 currently. So a close below that would take me out of the trade. Otherwise, I would remain in it as long as and if the XLU remains in an uptrend. And now for the coming week's economic reports. But first, please join us this coming Monday, August 6th, for our next session of Toni's Market Club. We'll talk about which side of the market to be on, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a better trader, and make more money. So please join us. If you can't attend the live session, it's no problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, please go to tonysmarketclub.com. And now for the coming week's economic reports. Not many of those, and remember, we are still in earnings season. Nothing much on the economic front on Monday and Tuesday. On Wednesday, we have our usual crude inventories. On Thursday, we have the producer price index, our usual jobless claims and natural gas inventories. And on Friday, we have the consumer price index. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.